Hi, Vlad. Today I'm going to speak about a directional trading model based on a time series trend strategy implemented with the Hummingbot V2 controller framework. So the model is based on an academic paper written by former Hummingbot alumni. They looked at historical autocorrelations of cryptocurrency returns and found some interesting patterns. So in the short term, you tend to get mean reversions, and in the medium term, you tend to get trends. So here, negative autocorrelations in the short term and positive autocorrelations in longer term. And they found that these patterns have been pretty persistent between 2014 and 2019. I replicated their results and found that these patterns still continue in the last couple of years from 2022 to 2024. And based on that, I built my time series model. So it has two groups of lagged returns, moving averages. So one is based on the returns lagged from 2 to 5 hours, short-term moving average, and a longer-term moving average based on lagged returns between 2 and 7 days, which is 48 to about 170 hours. Then I estimated time series model coefficients using linear regression. So you can see orange ones are coefficients based on the long-term moving average. I look separately at small, medium, and big returns to get extra differentiation. For long-term moving average, you tend to get all positive, so these are trends. For short-term, you tend to get reversion of big moves and trending, a little bit of trending for small moves. One more thing that's needed for the trading strategy is to figure out how I'm going to adjust my position dynamically as a function of the strength of the signal. And one feature I've used is to use different functions for putting trades on and taking trades off to account for transaction costs. So effectively, I'm a little bit more cautious putting on new trades because I know I'll have to pay two-way transaction fees. Here's the back test. The results are okay for a single time series model, but Sharpe ratio is about 1. It makes a little bit of money, but really to make this into a sustainable business, I don't have to scale it over many bots, many currency pairs. Here's the implementation. So I implement this as a standard Hummingbot V2 controller. So there's a config file, which is read into a config class. And this is the controller, which is a subclass of the directional trading controller base. The business logic is contained in a couple of methods: forecast, which is the time series model, and postfunc, which is the position function, as of how much of a position you want to have as a function of your previous position and the signal strength. And then this business logic, trading logic, is plugged into the Hummingbot V2 framework by re-implementing two callback methods: create action proposals, which is here it reads the signal and calculates the position and then sends trades to the smart components to be executed. And the second callback is update process data, which reads the data, recent bars, and calls the forecasts. So the entire program is less than 250 lines of code, which is great for a relatively sophisticated strategy. So here's the bot. It's been running for the last several hours. The market hasn't been moving too much, so market's been pretty quiet. So it hasn't really done too many trades, but you can see the values of the moving averages. You can see the expected Sharpe ratios, annualized Sharpe ratios before and after transaction costs. Hasn't done trades, but typically it trades one to two times per day. So I expect that before the end of the day, we'll get some good trading opportunities. So that's it. Really pleased with the Hummingbot V2 framework. It's very flexible, quick, and a good way to build and roll out trading bots. Thank you very much.